Fixed rate mortgages are dropping like a rock, and it's expected that they're going to continue going down. Let's talk why. Welcome to another Fruitful report where I just talk about the news, business, politics, totally freestyle, no edits, no music, straight fucking facts. You already know. Now, this isn't to be confused with the central Bank of Canada rates. These aren't expected to come down until spring, maybe even summer. But the reality is, with all the news we're getting and all the live data that we look at here on this channel, it's probably possible that the Bank of Canada is going to cut rates even way sooner than that. Maybe as early as February, March, we'll see. But that's not what we're talking about today. Today, we're talking about fixed rate mortgages. Now, this really confuses people because here's the thing. Central Bank, the Bank of Canada rates, that's variable rates. The Bank of Canada essentially controls the variable rate mortgages. Fixed rate mortgages are totally based on the bond market and have nothing to do with the Bank of Canada, nothing to do with the government. It is the bond market that fuels fixed rate mortgages. Now, the bond market is very confusing and could take like a university class and lecture to explain how it works. But all you need to know is that the 10-year bond, the 10-year treasury in Canada, that directly correlates with the 25 and the 30-year fixed rate mortgage. So essentially, whatever the 10-year bond does, fixed rate mortgages do. If the 10-year treasury goes up, fixed rate mortgages go up. If they come down, fixed rate mortgages go down. Doesn't matter what the Bank of Canada does. Doesn't matter about what the government says, what Trudeau says. It doesn't matter. It's totally separate. But the question is, and what you're probably thinking, well, Matt, why are they coming down? If the Bank of Canada is holding rates, essentially saying we might have to raise rates in the future, which is total bullshit, all this tough talk from Tiff Macklem, why are fixed rate mortgages going down? That makes no sense. That's going against the narrative of Tiff Macklem at the Bank of Canada. Yes, it is. But here's the thing. Bond market is like a stock market. Think of two different markets. We have the stock market and then we have the bond market, okay? So the bond market is hedge funds, big institutions, or just really, really rich people tend to trade mostly in the bond market. Why? It's boring. It's so easy. Normally, it's very slow and boring. It doesn't have a lot of this, like the stock market, Apple stock, Amazon stock, or even worse, more crazy growth stocks, Cathie Wood stocks that are literally like up and down, 10% one day, down 10%, up 10%, down 10%. The bond market doesn't do that. It's historically very, very boring, which is why big institutions, big corporations, governments around the world, they buy Canadian bonds. It's boring, it's easy, it's predictable. But like I said, the bond market is a totally different thing, okay? So it's very sophisticated. The smartest people, the richest people, the people with the most access, they tend to trade the bond market. Stock market is a fucking clown gong show. It's where me and you trade. The general public who don't know anything, we're just reading news reports, maybe at best, and we're just trading on gut feelings. Like there's no sophistication really in the stock market. Unless you are a savvy hedge fund, a savvy rich person, and you can trade in that nonsense and make a ton of money, that's cool. But the bond market is strictly just rich, stuck-up people who trade that. Just picture that. Now, why I say that is because the bond market, like I said, is very sophisticated and they know things the stock market doesn't know. They know when a government is bullshitting. They know what trends are coming. They can spot a recession a mile away before it even happens. The stock market finds out about it the day of and goes, oh shit, the bond market knows these things way in advance. It is a much more sophisticated crowd. So when you're looking for trends, when you're looking for an upcoming recession, a change in the market, a change in the economy, we always like to look to the bond market and say, what are you guys doing? What are you guys seeing? What are you guys thinking? And we can do that based on price activity, price action. What are they buying? What are they selling? What's going on? That can kind of indicate to us, the general public, what are they seeing? Because these are elite people. These people are in the know, okay? Think of like Klaus Schwab and like all these, crazy conspiracy. Okay, these are the type of people, I'm not saying Klaus Schwab, but these are the type of people that trade the bond market. So they know things way ahead of the general public, even way ahead of governments like the Bank of Canada. So if we're seeing such a change in the bond market in fixed rate mortgages, why is that? The Bank of Canada is so strong with their tough hand on the table. We're not done raising rates. We might have to raise rates. The bond market is literally saying, yeah, bullshit. You guys are done, long done. In fact, you've overdone it. That's what the bond market is literally saying. You guys have gone too far with your rate hikes, and we think the recession is already here, if not right around the corner. But in Canada, they're saying, yo, we are in a recession. And we also think that Tiff Macklem, you're bullshitting. We know you have to say what you have to say on the news so people don't go run out and go buy houses and cars and Rolexes. But we think you're going to be cutting variable rates very, very soon. And how do we know that? Because people are finally, after like 18 months of nobody really buying bonds, nobody buying the 10-year treasury because they knew the government wasn't done hiking. I mean, nobody wants to buy bonds when the government's going to keep hiking rates, because whenever the government hikes rates, bond rates go up. So nobody wants to buy bonds down here when the prices keep going up. See, the bond market is reverse the stock market. In stocks, we want them to go up. In bonds, when we buy them, we want them to go down. So we want to buy bonds up here at the peak, and then we want them to go down, because then we can sell them for a profit. Because we can say to somebody, hey, I bought this bond up here. Bond rates are right here right now, but you can buy mine way up here. Come buy mine. So like I said, it's a little confusing, but the bond market is reverse the stock market. We want bonds to go down when we buy them. Typically, when we buy Apple stocks, we want them to go up, right? So that's why really rich people, big institutions, big countries, big corporations didn't want to buy bonds for the past 18 months, because they're like, well, the government's not done hiking rates yet. We don't think they're done yet. So I'm not going to buy bonds now. I'm going to wait until I really, really think they're done raising rates and a recession is like right around the corner. Then I'm going to buy bonds. And what have we been seeing the past 2 weeks? Yo, people are flooding into bonds, buying a ton of them, which drives the price down. Why? Supply and demand. Again, it's reversed from the stock market. When tons of people will jump in and buy Apple stock, buy Amazon stock, what happens to the stock? Supply and demand. The price goes up. The more people who want to buy something, the more expensive I can make it. Think of it that way. With the bond market, it's the opposite. When a bunch of people jump into bonds, say, I'm going to buy now, prices come down because there's supply and demand. If lots of people want these bonds, it's going to drive prices down because people can sell them for a profit for that spread. Now, I know this can be a little confusing if you're not into stocks or into how financial markets work. All you need to know is rich people and institutions are at the peak end and they're saying, you're done raising rates, you're in a recession, now I'm gonna buy your precious bonds because I know soon you're gonna be cutting rates, which is gonna make my bonds even way more valuable. So I'm buying now. And that's based on all the economic data we've been receiving in Canada, proving that we've been at a zero GDP since January 1st, 2023. The Canadian economy has not grown at all. And if you strip out our crazy immigration rate, which is really propping up GDP, we're actually negative. We're so negative, actually. We just got a saving grace by all the immigration we've had to prop up the GDP to 0%, which is still really bad on its own. But if you strip that out, we are so negative, it's not even funny. The Canadian economy is contracting, which is why people are fleeing to bonds. Like, yo, perfect. I'm going to buy your sweet, precious bonds now because I know you're in a recession and that rate's going to plummet, making my bonds worth even more. Now, one other indication that's telling the bond market and all these big corporations and rich people to start buying these bonds is that gas is coming down all across the world. And that is really historically a signal that inflation is going to fall like a fucking rock, which means even more, hey, the government's done raising rates. Because we know in the month of November, December, January, February, by March, oh my God, Canada's inflation rate is going to be so low. A lot of smart economists are predicting our inflation rate can be as low as 1 to 0% as soon as March, April, May, June. So again, this whole narrative of Tiff Macklem saying like, I don't know, we might be at, 2.8% inflation by December 2024. The bond market and all the economists are saying, are you kidding me? You're possibly, how things are looking, you're going to be at like 1 to 0% GDP by like spring, which is really not good. That's way too little inflation. You need more inflation, which means the money printers come on, which means assets are gonna rise, which means 2021, 2022, crazy real estate, crazy stocks, balances going up. That's gonna happen all over again. That's what the bond market is saying with its price action. You just gotta pay attention. And if we look throughout history, the price of gas, which is why I mentioned it, is way more important than the price of oil. We've had the price of oil hit like $65 a barrel, $60 a barrel, and US and Canada still do well economically. It doesn't necessarily mean recession or super low inflation. No. What people don't understand or look at is the price of gasoline. That really drives the world way more than even oil. Yes, you need oil to make diesel and gas, I understand, but it's really the price of gas that you got to be focusing on. And what are we seeing? The price of oil, yeah, barrels are coming down. We're at about $80 a barrel right now. It's coming down, but gas is like plummeting. Well, how's that possible? How can oil stay here or even rise a bit, but the price of gas coming down? Gas comes from oil. What are you talking about? The reason is because the US made so much gas during the pandemic time in anticipation of a slowdown of needing gas. They made too much gas. The US has so much diesel and gasoline, it's causing supply and demand issue. When you have so much more supply than what you need, prices come down. You have too much supply, not enough demand. Economics 101. So that's why the price of gas is coming down. And if you look through history, every time the price of gas, not oil, price of gas comes down a lot, it signals recession and it signals super low inflation to come. And again, it makes sense. If you think about it just logically, the price of gas dictates everything. Farmers use gas. Gas is cheaper. They can lower the price of food. The truckers who deliver our food to all the grocery stores, if gas is cheaper, the price of food is cheaper and it gets passed on to the customer. If the stores can buy these bananas and lettuce and celery or whatever for at a cheaper price, they can sell it for a cheaper price, which is going to make customers happy. They're going to come into the store. Prices come down. Deflation. So all in all, that's what the bond market is signaling, which is why, in turn, fixed rate mortgages are coming down, even though Bank of Canada rates are staying still for now. Variable rates are where they are, which is high. But the fixed rate mortgage is starting to trend down, and the trend for the next 6 to 8 months to a year is down, 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 down. So what does that mean for real estate? This is a real estate investing channel. No surprise. If fixed rate mortgages come down, affordability goes up for buyers. There are so many buyers on the sidelines right now. It's insane. Pent up demand. Everybody's just waiting for the Bank of Canada to say, we are done raising rates. Finally, that's what everybody's waiting for. Not even we're going to cut rates. They just want to know this is it. This is the top. And when that happens, when Tiff Macklem finally says the words, which is coming in the next few months, we are done. Oh my God. The bond market is going to fall even more, which means fixed rate mortgages are going to fall even more, which means more buyers are going to flood into the real estate market and say, finally, now I can buy my home. Now I can get in, which means prices going up for real estate. You thought a crash was coming? You thought 2008 was coming? Bullshit. If you've been watching this channel for the past, I don't know, forever, for the past couple of years during this interest rate shit, I've been saying this for the whole time. Real estate prices in Canada ain't going nowhere. There's way too much demand, way too little supply, and we know where inflation is going. And now we're at that point where I've said for the past 18 months, dude, we know where inflation is going. We are here. We are now. Inflation is about to drop like a rock over the next coming months. We already see that. The bond market is saying we know what's coming. We're like the wizards of the stock market in the financial world. We know what's coming, and we're predicting, and we know this is what's going to happen, which is why you're seeing fixed rate mortgages come down, which is why if you watch this channel and you're educated and you know how to read charts and you just know basic logic of how financial markets work, you are set up to be a fucking investing savage. Anyway, guys, I'll see you in the next video.